Hello, on the screen is Sonata Software Limited's Quarter 1 Fiscal Year 2026 earnings con call. This is the transcript of the con call. A lot of important things were said in the said above mentioned con call. So let's read them out. All right, that was a horrible intro. So, first, we have page 7 of the con call. Okay, and here an important paragraph was said by the management of the company. Let me zoom in. Okay. So the management, this is a statement by, I believe, the current CEO of the company. He says that in terms of tailwinds during the quarter, we benefited from three growth drivers. All right. So the first thing being discussed here are the tailwinds. Tailwinds, basically the things that helped our growth, and headwinds are the things which made us struggle. So, in terms of tailwinds during the quarter, we benefited from three growth drivers. First, we announced a large deal in April timeframe for a TMT client. TMT, Technology, Media, and Telecom client. Now, this massive deal, is now nearly ramping or ramped up, and that expanded our growth during the course of the quarter. All right. This means that the deal that announced in April, the majority of the work in that involved in that deal has been done. So majority of work is done and majority of the revenue that was to be made from that deal has already been made. So the deal was very large and that contributed very highly to the expansion during this quarter or the growth during this quarter. Now, second, their continued strength in healthcare, life sciences, and BFSI is continuing to help us gain market share in these two verticals. All right. So they are gaining market share in these two verticals. Which two verticals? BFSI and healthcare, life sciences. Moving on. And a strong performance in data and AI led deal wins is reflecting a strong growth demand environment. So they're having a strong performance in data and AI led deals. Now we talked about the headwinds. So the tailwinds were the major deal for the TMT client in April. Then growth in new things like data and AI. Then continued strength in healthcare, life sciences, and BFSI. So these three things were the tailwinds. Now talking about the headwinds. The headwinds impacting our performance. We are navigating through some challenges, specifically around global softness in retail, manufacturing, and distribution after the tariffs were announced, and with client uncertainty driven by those tariffs and regulatory changes in this vertical. So, first headwind is softness in retail vertical, manufacturing vertical, and distribution vertical, especially after the tariffs were announced. All right. So the second headwind is now this is important, and this point, the second point is a recurring point throughout this con call. Two of our large clients, a BFSI client that is a banking, financial services, and insurance sector client, and a high tech client are seeing budget pressures and cost control pressures right now. So this discretionary spend is under pressure there. All right. So two of their very big clients are under or are facing cost control pressures and budgetary pressures. And how does this impact Sonata? Because, of course, if they spend more money, these clients spend more money, then there's a higher chance that Sonata might get a deal. Because, of course, they're going to spend money from somewhere, like on something. They may spend money on more modernization, more tech, and Sonata may help with that. But right now, they are under budgetary pressures and cost control pressures. So, less money for Sonata. Had mentioned, discretionary spend is under pressure there. All right. And lastly, the third reason is the slowdown in the IT sector and the ITES sector in SITL, including potential risk associated with a couple of large accounts where the partner wants to go direct engagement model with our customers. All right. And IT is information technology. What is ITES? ITES means information technology enabled services. Okay. And what is SITL? Let me explain. SITL, or I believe this is Sonata Information Technology Limited. This is a subsidiary of Sonata Software, and this is majorly involved in reselling of software, reselling of Microsoft software, reselling of SAP and Oracle software. It's involved in that. ITES, Information Technology Enabled Services. This is basically when, after reselling software to a client, Sonata Software Limited can help with the implementation of that software that they sold, the resell software. Like they sold some Microsoft software to some client, then they can help implement that software. So implementation is a value added services. It's another income source for Sonata Software. So they are facing slowdown in the IT and ITES sector, that is reselling of software and then selling of the implementation of this software. This sector, they are facing slowdown. Also, there's a risk involved that a couple of the large accounts is risk associated, potential risk associated with a couple of large accounts where the partner, like especially Microsoft, they want to now sell their software directly to the customer without any middlemen or middle agents like Sonata. That can be a risk. Here it's mentioned where the partner wants to go direct engagement model with our customers. So there is a risk. So these are the tailwinds. One we saw was tariffs, and that impacted retail sector, manufacturing and distribution. What was the second? Yeah, two of the big clients facing budget pressures and cost control pressures. Then third, slowdown in their basically the reselling of software business and the following implementation and value added services provided with that resold software. That sector is slowing down with potential risks emerging with some partners like Microsoft or some other technology company wanting to go directly, wanting to sell directly to their customers. All right. One more thing that is a positive is their pipeline. Their AI led order book grew significantly from previous quarter. Their pipeline for AI is now nearly $46 million in the first quarter. $46 million AI book or AI led deals pipeline. Very nice. Significant growth here. All right. Moving on, we go to page 11 of the con call. All right. Page 11 of the con call. What are the things we repeated? Let's go here. Now, the management talks about their vision and their strategy for the future. Now, our vision remains and our strategy remains clear that as we execute forward, we want to be in the top quartile performance. So, if you take a look at the mid tier segment, there are about 20 companies. So, we think we will be in the top five or six companies from a growth perspective. The strategy and the vision is clear, it remains the same. We want to be a top quartile performance, top quartile growth firm in terms of like revenue growth. So, yeah, they want to be the top five or six of all the software companies under consideration in terms of revenue growth. From what I understand, that's the vision. So the vision remains clear. Now, important part. Okay, this is an important question. Here, an analyst or a shareholder asks the management in terms of the challenges from Microsoft going direct in the domestic part of the business. Can you give us some further updates on that as the thought process evolved on that? Has Microsoft got some traction on that? If you could give us some kind of an update on that. So the analyst or the shareholder wants an update on Microsoft's decision as they going direct. They want to sell their software directly to customers in the domestic business of Sonata software. So the answer from management is We have not yet gotten update from them because this is a broad global decision for them. And in the implementation, we have not yet got the final decision from them. We may have impact for one of the largest customers in this year, but the decision is still pending. So basically, the decision is still pending. They don't know. They don't know. Further on, they elaborate that, however, as Samir has articulated about what are the other things we are doing to manage the risk, we are prepared for whatever changes come up. They can be short term impact, but we will try to have our risk management steps will help us to catch up. We will try to have our risk management steps will help us to catch up in the medium term. Basically, they don't know. Microsoft has not given them any update, but they think that they will be able to navigate through this problem and there will be some impacts in the short term, but they think all the measures that management is taking to counter this risk, they may be able to catch up in the medium term if there are any problems in the short term. All right, all right, all right. So we move to page 15 of the con call. Okay, all right, all right, all right. That's the same point actually. Moving on to page 16 of the con call. Now, this is important. This is guidance. Now, here we are talking about the margins of the international business. What is management's expectation of the future guidance, future margins, at least international services? So the statement goes as forward. And secondly, on the margin side. So first, this is the question regarding margins. And secondly, on the margin side, how do you see the margins panning out? Obviously, we have been operating pretty high margins earlier, but now it has been reset to around 16x, 17x. 16x, 17x is basically 16%, 17% margins, operating margins for international services. Continuing, earlier we had a target of scaling up to 19, 20% earlier. So earlier, Sonata Software had a target of reaching 19 to 20% margins. So what happened? Continuing to read. So where it stands right now in terms of margins, what are the margin tailwinds that we see from here? And seeing the industry scenario, do you see this as the new normal in terms of margins? That's the question. Very nice question. Now, the answer by management is it may take a couple of more quarters for us. We have mentioned that we will be able to come closer to 20%, not 20%, but closer to 20% margin by the end of the year. All right. They think they will be able to reach close to 20% margin by end of the year. Continuing, we continue to believe in that and we will keep you posted if there is any other new development that happens. But as of today, we are continuing to focus on reaching closer to 20% margin by the end of the year. All right, so this is something that we can, let's say, record their word on this. By the end of the year, they're estimating margin should be 20%. Let's see how able is management in accomplishing that. But of course, something unexpected can always happen. All right, all right. So the question, the analyst or the shareholder continues the question and asks, so any color if you can give, because 20% is quite high from where we are currently. So what will drive these margins? What will be the operating leverage, or is it some kind of cost cutting that we're looking at? Operating leverage is when profits rise higher than the revenue, and that happens when a lot of the initial costs are fixed costs, and as revenue rises, the rise in variable costs is not as much as the rise in revenue. So variable costs are not a lot, fixed costs are a lot. So analyst is asking, how will they reach 20%? What are they actually doing? All right, answer can be a bit generic, but okay. Answer is this is a different picture, Amit. Yes, we are continuously working on it. One of the factors that you mentioned about the large deal is ramping up. That will also help to bring the change, the mix, if you see. There's a change in the mix of on-site offshore mix for us. Okay, there's a change in the mix of on-site offshore mix for us. This will continue to help us to grow. We will improve on utilization. that will also help us do it. There are many other factors, including pyramids. We're working on various other aspects of it. So, a bunch of things will help them. A change in the on site offshore mix, which basically means that working for clients, will this be on site? Will this be offshore? So there will be a change in the mix. They will work on utilization. The main thing is they're aiming for closer to 20% margins by the end of this year, and they need a couple more quarters to work on this. All right, all right. Yes. Moving on, we are on page 16 of the con call. We move to page 18 of this con call. All right, all right. Here on that large deal, the TMT deal, April time announced. Some more information on that. Okay. Third part of your question was on the TMT deal. I think, like I said earlier, the $73 million deal we announced in April is now nearly ramped up. So this April deal was $73 million, and most of the work has already been done. Continuing to read, there are some parts of it which will probably trickle over into quarter three, but in this current quarter, during the course of the quarter, it will get nearly ramped up. All right, all right. So during the course of this quarter, the work will probably be almost done. Moving on, we move to page number 19 of the phone call. Here, a question is asked by the analyst. Okay. So, hi, sir. This is Suraj from Catamaran. His question, my first question is on the number of clients in the 3 million to $5 million bucket or the bracket. It has decreased from 10 to 6 quarter over quarter. So can you throw some light on that? All right, very good question. Number of customers in the 3 to $5 million bracket has decreased from 10 to 6. Reasons? The answer by management is the customers with more than $5 million have improved. Some of them have moved to that more than $5 million also. All right. So some of the customers have moved beyond $5 million, so are in the above category. And on some of the projects, the run rate has come in 3 million to 5 million category. There's a small dip in there. And some have moved up in the level, and a few have come a little less in the revenue. That is why the drop is there. Nothing operation, it's just project completion or completion of the existing run rate of the customer. That's it. Answering further, he says, there's nothing alarming or nothing specifically that we have lost or something like this. Yes, of the normal, some projects get over. So, what led to the decline? Management said, nothing to be concerned about. This is how just the business works. Some clients have moved above that $5 million category. Some clients have moved below the 5 million uh, $5 million category. And some of the clients, the work was just completed. The projects were all completed. So they just are not there as clients anymore for now because the work got completed. That's business, nothing to be concerned about. All right, all right. Moving to page 20 of the con call. Now, here, the question is so if you can just give some context regarding the BFSI growth beyond one of the BFSI, do we think this vertical can come back to growth? Will Quant scale up fast enough to offset that impact going forward? Now, one thing, who is Quant? Quant Systems or Quant is this new company the Sonata Software has acquired. A software company it has its own clients. So when Sonata acquired Quant, it will of course acquire those clients, and the revenue will increase because of this acquisition. And also, as mentioned earlier, the BFSI sector, one of the big clients, the BFSI client, is facing budgetary pressures right now, cost control pressures, and that is negatively impacting Sonata. So the analyst is asking, what is their future guidance or the future expectation of growth in the BFSI sector? And Smith Quant, the acquisition, the now subsidiary, will scale up fast enough to offset that impact. All right, so the answer is yes. So, in general, we are reasonably optimistic about BFSI growth. However, having said that, we are seeing headwinds in the largest BFSI clients. So, we have to manage that. because there's a concentration of a large client in those BFSI numbers. But if you back out one single client, large client, if we back out that one large client where we are seeing the headwinds, I think in general we will see a good momentum in the course of the year from BFSI. It's a solitary client issue that we are facing. Okay, so the entire problem, the entire low growth or degrowth that has been experienced in BFSI for Sonata software, that has been due to only one client. But if we just not talk about for temporarily, we do not talk about that client and we talk about the rest of the sector, they expect that growth will in fact come back. All right, all right. Um, yes. Fine. Same page, page 28. He continues. BFSI minus the large client where we are seeing softness right now. I think we will be on the growth side. However, the impact of degrowth from this large client is yet to be ascertained. It's not yet certain how much degrowth we will still, experience. We're just working with them to understand what impact they're going to have in the remaining part of the year. We cannot answer that question, but minus of this large client in BFSI, we think we will continue to do well in BFSI. All right. Now, on the technology media and telecom side or the TMT side, like Jagan said, the largest tech client that we have, they're flattish at this point in time. Minus of that, we are seeing good momentum in TMT as well. All right. Now, next question, and I think this will be the last thing with the entire con call. Okay. The question is, if I can ask just one more question. Okay. So if we look at retail and manufacturing, are we expecting further headwinds there? Or how is that looking? That's one. And for the healthcare also. So, how are future expectations for growth in the healthcare sector and in the manufacturing and retail? Now, the answer is retail manufacturing. I think it's been quite a tough period for retail vertical for us over the last, especially 2, 3 quarters since the tariffs got announced. We don't believe the impact is still fully behind us. We are cautiously watching. At this point in time, we are talking to our clients. We are making sure that we stand by them in these days and times. It is still unclear. Okay, it is still unclear as to what the impact of retail manufacturing could be further, but we have seen quite a lot of headwinds in the last 2, 3 quarters for sure. So for retail, they just don't have an answer. They just don't. As far as the healthcare is concerned, I think, as I said earlier, like the pharma and the health tech has done well. And so, overall, in healthcare, we see positive momentum going forward as well. So, they don't have any answers for, again, healthcare. And, but retail, sorry, they don't have any answers for retail. And for healthcare, they are pretty positive. For BFSI and TMT, other than the big clients, things seem to be going well, but the big clients seem to be the issue. And especially for the BFSI client, I believe they're still talking with the client to see how much more budgetary pressures and issues will they have. All right, all right. I think this was it. I have marked page 21, but there is nothing on page 21. So that was it. That was all in the con call. Uh, Hope you like this and have a nice day.